Welcome to the $100 billion crime scene, where the old guards of pain management are being systematically replaced. For decades, the industry was addicted to opioids. In 2026, we're witnessing a cold-blooded clinical coup. This isn't just a biotech update, it's a total rewiring of how humans experience physical suffering. Think of this as the Tesla moment for the central nervous system. We're ditching the dirty internal combustion of morphine for the precision electric pulse of NaV 1.8 inhibitors. We have a $600 billion hole in the US economy, and it's shaped exactly like an oxycodone pill. 100 million Americans are in chronic pain, yet our standard of care is still effectively Civil War technology with a chemical facelift. The opportunity here is massive. 2026 is the year we stop just muffling the brain's alarm and start muting the specific nerves responsible. It's like finally finding the specific mute button for a smoke detector instead of just throwing blankets over it and hoping the house doesn't burn down. Vertex, VRTX, is playing a high-stakes game of hide the margin. They lost $1.78 billion last year, not to R&D, but to the gross-to-net GTN meat grinder. When you see a billion-dollar deduction in a premium biotech, it tells you one thing. The insurance companies aren't just partners, they're the tax collectors of the pharmaceutical world. For every dollar Vertex makes, a chunk of it is essentially a bribe to stay on the insurance formulary. It's the business equivalent of selling a Ferrari but paying half the price back to the dealership just to keep it in the showroom. The rebate wars are over, the mechanism moats have begun. In 2026, if your drug doesn't have a unique biological signature, you're just selling expensive generic aspirin. The Big Five are now re-engineering their P&Ls to prioritize IP that can't be negotiated away by a PBM, pharmacy benefit manager. We are moving from a world of volume to a world of absolute clinical leverage. Let's look at the efficiency leaderboard. Vertex is the undisputed alpha here, generating $2.22 million per employee. That's not just efficiency, that's a clinical money machine. Meanwhile, Axum is burning cash like a bonfire at an 89% SG&A ratio. They aren't just selling drugs. They are essentially buying the doctor's attention with every cent they have. It's like comparing a high-speed automated factory to a luxury boutique where the sales staff outnumbers the customers 10 to 1. The launch of Journavx, VX-548, is the silent predator in this chart. 550,000 prescriptions in the first window is the biotech equivalent of a blockbuster movie opening. Pachira's Exparel, once the king of the hill, is suddenly looking over its shoulder. When a drug hits this kind of velocity, it doesn't just grow, it consumes. Journavx isn't just taking market share, it's terraforming the entire landscape of acute pain. Vertex's secret weapon isn't just science, it's reach. Covering 200 million lives by 2026 means they've built a massive infrastructure before the competition even laced up their shoes. Their NaV 1.8 mechanism is the first legitimate oral alternative to heavy opioids in half a century. Having this kind of scale is like owning the only bridge in a town of islands. You don't just set the price, you control the traffic. Axum's 89% SG&A ratio is a cry for help disguised as a growth strategy. They spent $571 million just to manage $638 million in revenue. In the biotech world, this is the customer acquisition war. They are fighting for doctor mindshare in a room full of shouting giants. It's the pharmaceutical version of spending $9 on advertising just to sell a $10 hamburger. The burger might taste great, but the business model is currently on life support. Teva is the industry's greatest comeback kid story, or at least its most expensive renovation. They've moved from being a generic dumping ground to an innovation hub. With an 8% workforce reduction and $700 million in savings, they are stripping the weight off to finally run the R&D race. They're like a retired heavyweight boxer who's lost 50 pounds and is suddenly showing up to the gym with a terrifyingly fast jab. Let's get nerdy. NaV 1.8 is the holy grail of analgesia. It blocks the pain signal at the source, the peripheral nerve, before it ever reaches the brain. No brain impact means no high, which means zero addiction potential. It's precision-guided pain relief. If traditional opioids are a carpet bomb that destroys everything in its path, NaV 1.8 is a, quote, surgical drone strike on the specific nerve ending that's screaming. Geopolitics is the new side effect of drug development. By licensing to Zai Lab, Vertex is performing a masterclass in, quote, asset segregation. They are following a strict One China protocol while insulating themselves from the BioSecure Act's fallout. It's a tactical decoupling, keeping the Chinese market revenue while moving the sensitive CDMO manufacturing out of the crossfire. In 2026, Your supply chain needs to be as flexible as your R&D. Government policy is finally writing checks that the industry can cash. The NOPAIN Act is a massive tailwind for companies like Pachira. By mandating separate Medicare reimbursement for non-opioids at ASP plus 6%, the government is essentially paying hospitals a safety bonus for not using narcotics. It's the ultimate financial incentive. Doing the right thing for the patient is now officially the most profitable thing for the CFO. Vertex's leadership isn't just looking at the next quarter, they're building a multi-decade fortress. Reinvesting nearly 33% of revenue back into R&D is a level of aggression most companies can't survive. With their $5 billion Alpine acquisition, they aren't just a rare disease company anymore, they're becoming the Google of immunology. It's a flywheel of innovation where today's cystic fibrosis profits are funding tomorrow's total market dominance. Now for the red flags your broker won't mention. Vivozon is capitalizing R&D to the tune of 11.6 billion Korean won. That's accounting speak for hiding expenses in the attic. And Teva? They're still carrying $4.75 billion in legal baggage. These companies are walking a tightrope. One clinical failure, and that capitalized asset becomes a massive impairment that craters the balance sheet. It's like buying a house with a hidden termite problem. It looks great until you try to put weight on the floors. The verdict for 2026? The generalized painkiller is a dinosaur. The future belongs to those who own the mechanism moat. Vertex is the new apex predator, Teva is the leaner, meaner survivor, and the smaller players are either going to be acquired or starved of mindshare. The non-opioid revolution isn't coming. It's already here, and it's being won by the companies that control the chemistry and the reimbursement. That's the deep dive for today. If you want the full-page underlying data and the proprietary HDIN research models, you know where to find us. Drop a comment below. Which of these biotechs are you betting on for the 2026 pivot? Don't forget to hit subscribe and check the link in the description for the full deck. Until next time, keep your eyes on the data and your margins high.